Yo, 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 good morning, good morning, good morning. Let's see what's going on with the charts really quick. I was literally just uploading a post on Instagram, so give me a second. Now I'll do X really quick. Alright, okay, so right, so let's see what's going on in the charts then. So basically, yeah, yesterday longs were the real trade here. I'll just go over that really quickly. So build up, inducement, broke structure, come back into tap into demand zone there, and there's trend line there to attack. And there's this supply zone to trade into. So that was actually a trade I could have taken, but I was too focused on I didn't really mark out that whole zone, so that was kind of my own fault, but it's okay because M1's not the easiest and every day's a learning curve, so it's fine. So yeah, I just wanted to say that. Now let's have a look here as to what's going on. We got loads of highs over here. Definitely want to take longs into there. So that's interesting. And then what we've seen with GU, so it took that zone by 0.5 pips. That's interesting, isn't it? Okay, so we've had a build up. We've had a build up and then a sweep and then a push to the downside, and then we've had build up there, push down, but we didn't go up, so that's fine. And then we had here another build up, but we pushed out of this. Now that could signal a reversal, so that's interesting. And this would be the zone. What the hell? This zone would be relevant also, I think, because there's liquidity above it. You got 1, 2, 3 relatively equal highs right here. Right there, see. So I want this to break structure basically. Like I say, that price is now starting to turn to the upper side. Unless, and then I need the price to come back. But if price goes all the way higher, induces this into this zone, then we can sell from there. But I want price to tap into here, because then we've had an inducement, we've had a lower high, we've had a high low. If we make a higher high, you can take this high and this high, no problem. Then we should come into this zone to make a higher low. So that's kind of what I'm expecting. Sorry about the YouTube adverts. So that's what I'm thinking anyway. Kind of something like, if I get that tool, music's back. Governor Bailey is going to speak at 10:15, so that's a bit of a tricky one also. Have to be mindful of what happens with that, to be fair, depending on who says what and stuff. So yeah, what was I thinking? So lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher low. If we make this a higher high, come to high low, and then go continue there to this zone. Assalamu alaikum Rahib, how you doing, bro? Aap kaise ho? Good morning, bye. Good morning, bye. Okay, so we broke structure there. That's perfect. I'm just gonna set the limit here now. 5 limit all the way down to 5. And then this is gonna be There's a limit set for longs on GU. Unless price comes up and takes this high, unless we get this, then we're gonna short from here. So we got both sides. Walaikum assalam wa barakatuh. I'm good, and you? Alhamdulillah, bro. So I can't give you moderator, man. I was gonna wait. Actually, no, wait. 1 second, bro. 1 second, Rahim. Moderator किस तरह बुला? Add as moderator. There you go. Now you're moderator, bro. So now you can send the links and stuff like that as well if you like want to or something, you know. Oh wait, I need to do my please like, share, subscribe thing. 1 second. Yeah, that's better. Okay, the hell, man. Oh, I said don't save. Oh, price come into the zone really quick. I didn't even get a chance to take from my other accounts. No. Gus me. There. Now I've set it on this account also. I just hope it triggers on the other account. Yalla trigger. There, trigger hoegi. Untak sa if it's right or wrong. Bro, price come too fast. I didn't even get a chance to enter into it. Because this is also a valid time. It's annoying that I missed some of my accounts, man. Flip it, boom, it happened so quick. Happened so quick. So this one hasn't happened yet. I'm waiting for now. That's fine, bro. Anyway, let's look at these other pairs. I'm waiting a deep pullback or sweep the Asia low and then enter from, yeah, but it might not necessarily do that because you stepped a good low from here also, so it might give a reaction from here. It's possible. It's either gonna do something from here or it's gonna be a loss in it. It's one of the two. Go. I'd like to see a push from here, inshallah. Now we've come and we've taken this low. It'd be nice to see a push from here. If we break this high or this high, I can go break even really fast, inshallah. Let's look at these other pairs anyway now. So what's happening here? So we've just had price come take these highs. Okay, so let's go to M1, see what's happening here. It's close to taking this high, isn't it? So close to taking this high. So let's just do 8 o'clock. 8 o'clock might be the one that wants to take this high, possibly. Price is coming deeper into that zone. It might take me out. Yeah, took me out. There's a L. Cholo. Markets have beaten me so many times now. It's okay, bro. It happens. You don't win every trade, innit? Some trades you lose and it's fine, bro. Aha. One second, bro. There, that's better now. Basically, it wasn't working on GU for some reason. I was looking like, hey, why is it not working here, man? Like, it should have worked. I was just looking at that. Okay. Had a slightly bigger loss on them. Still up on my account, so that's not the end of the world. Okay, let's keep looking. So price took me out from here to here. Bro, markets beat you all the time. You just have to become comfortable with it, you know, that this is gonna happen. I think this would have been a better entry, but I didn't want to. I could have layered it, could have put it there and then put this entry there. But it's 8 o'clock in 9 minutes. Price may want to come take the low and then go higher, or price may want to come up, take all these highs 1 2 3 and then go lower. It's hard to say. EU is chopping, but that's no good. This is the other thing I'd want to see on GBP yen. Well, Rahib, how's your accounts? Yeah, so is your account in profit or is your account in drawdown? Or do you still not have an account? In drawdown. Welcome to the club. You should make a Discord say welcome to drawdown, and then there'll be millions of people in there. We teach people how to become drawdown. Oh, Rahib, bro. I miss you, man. Yeah, it's good it's coming down. I just need it to come down more.
Next time on Love Shack Celebrity Caravan Edition, a flat tire causes havoc. Look, of course you could.
What the hell are they talking about?
Serious.
How's family and everyone? Okay, so price is still coming down. You know, for shorts, I wanted, if I was gonna short this, yeah, I'd want price to come down, to go up, yeah, take this zone and then give a break to the low side, but it didn't do that. That's good. What about yours? Yeah, family's okay, bro. Tiki and in it, they're alright. Okay, so it's made almost equal lows. Maybe I was wrong to take that trade because it did touch into this zone, but it didn't break the zone. So I should have waited for this zone to get broken as well as a breaker structure, then took a buy maybe. Because you can trade from this zone, but I seen the break in the zone. I seen the break. I thought price is gonna go higher and do a break anyway. So I thought, chalo, I'll take it from here. But then I know whenever you come to like a smart money trap zone, if price goes in there and normally comes back, induces something to take the zone out. Now we've come back, induced this, tapped into this deeper level. Now it might go higher and take that. It's quite possible. Because if I entered on M1 from here, I would have gone all the way to almost drawdown, and then as soon as I broke this structure, I would have been break even. Yeah, look at that. Trading is not an easy job, bro. No, what's your new look? Unless 8 o'clock comes and then it takes this high, then it gives a dual break. That's also. That's made equal highs. Look at the spreads on GU, 0.4, 0.5 pips. What GBA? Spread both bada hai. Send me a picture, yaar. Oh. Right, bro. MashaAllah. You look cute, man. No, that looks good actually. I like it. I like that look. That's how my haircut was, like tinned, kind of like tinned bald, kind of like, you know, really short hair and then just the beard. That's good. It looks nice. Okay, my hairline is going back, bro. It's okay. You're a trader. This is normal. When you trade more, your hairline go all the way to the middle of your head, like in the middle. Okay. So now we've taken this resistance level 1, 2, 3, 4, 5, 6, 7, 8, 9 touches or something like that. Like many points of contact. Now I want to see a break to the low side. My hairline is going back. That's so funny, man. Damn, dude, I took the same trade in GU 15 minutes ago. Yeah. I got stopped out on this one. I didn't cover this trade though, but I got stopped out on this one. But to be honest, I should have waited for this zone to get taken before getting into that long anyway. So I'm just watching price action now to see what happens. So far, I don't like summer price action. So see what happens then. So we've come into this zone now. You can probably take a long here because this zone broke that zone anyway, but I'd want more confirmation. I'm gonna go, bro. That's fine, Rahib. Take it easy, bro. Bye. Like the video, please. This looks so suspicious to me, man. We're just talking a build up right here. We need an expansion outwards up or outwards down to fuel the move higher or fuel the move lower. But we're not really getting anything. Abhishek, do you trade M1 as well, yeah? I just have to wait for something to happen. We're in a build up on both sides. Build up here, build up here. Either it comes down and then it goes up, or it comes up and it goes down. I prefer it comes down to go up, because then my initial thought is correct, it's just my entry wasn't right. I prefer that. Oh my god, summer price action is not good. Price is still chopping around on GUEU also.
Now it's even easier to sell for free on eBay. I was thinking, maybe I should sell that juicer we've used a grand total of once. Or the shirt I've been saying I'll wear for the last 2 years, but never have. Or that tiger cushion the dog...
I need one of these two to occur. Please. Please. Ugh. So price is pushing into deeper levels of this. If I took it from here, price would have missed me anyway. We need the zone to fail before we can actually take the trade anyway, so. And still chopping around in that zone. Have to keep waiting. Yes, Alan, what are you saying? I took a L, but the trade's not exactly invalid. So it's one of them. Get rid of this. So basically, there's this supply zone here. Price come down, tapped into it, tapped into this, made a higher high, higher low that led to a breaker structure here. So I took a long from here. I should have waited for this zone to fail before taking the long. So yeah, and then I was looking at this zone here, and it's still not failed, and this still hasn't failed. The price action's really bad, bro. Really bad. Really bad price action. So now I'm just waiting to see what I can do in it. I'm looking at possible GBPCHF longs, possible. I'm still sticking to, I can flick, if price does this, I can take a short. If price does this, I can take a long. I'm just literally, because you're stuck in a build up here and a build up here. I mean, all I'm seeing on this is a build up, a pull down, and it might go higher. So that's why it met the criteria, so I took it in. It is what it is. And that zone just failed also. That's perfect. So yeah, just waiting to see what happens now, really. But yeah, as you can see, the price is a bit willy-wally. This chop is really bad, bro. Big time chop. Oh yeah, I'm just waiting now to see what happens. See, look at GU, bro. 1, 2, 3, 4, 5, 6, 7 highs. 1, 2, 3, 1, 2, 3, 4 lows. It's just literally stuck in that since London Open. We've done 7.6 pip of a range in the last 46 minutes. That's so bad. You've done 9. This price action's pants. Proper pants. Governor Bailey speaks at 10:15 as well, so I think that's definitely not going to help. Yeah, Governor Bailey speaking at 10:15. I might dip then at about 9:30, 9:45. I might dip because I'm not gonna trade 15 minutes before anyway, or 20 minutes before. So if there's a speech in it from Bailey, you get me. CHF is still going lower. Which is fine. So yeah, looking a bit dry today. Okay, so actually we've dropped through this zone hard, which is good. Is that an M1? Yeah, perfect. Now we've induced the low. Now it should give an opportunity to go high. Bro, pound's falling quite hard. The pound is dead, akhi. The pound is dead. Oh shoot, why am I on M5? EU's taking the low here. Asia low. It's gonna tap into that supply zone. I don't know if it's gonna respect it or if it's gonna sell from there, so I just need to wait. Alan, when did you wake up? I don't know if you're still here or not. Alan, Steve, Alan. Yes, come up to that zone now. Tahmid. So now price has absolutely annihilated this zone. Now it's taken the higher zone. Now I can look to short. This is a potential zone to take short. Build up, inducement into mitigation for a potential sell, and we've taken Yes, man, like Lee, how you doing, bro? Bro, I took a L already, man. Price action's been so bad. So bad. I didn't trade last summer because I thought I'll sit it out, yeah, because I don't have much data or experience. But, bro, looking at this price action, it is so pants, man. I'll show you my L in a minute. Tempted to take a stab at this. I think it was a good idea to not trade last summer, man. This is challenging conditions, to say the least. Quite challenging conditions. Yeah, I'm gonna take a punt on it, why not? Right, so that's set on one batch of accounts. And then this is boom on these. Lee, pray that this goes well, because I've already took a L. If I get whacked on this, I'm gonna call it a day, man. I'm gonna literally call it a day if I get whacked on this. Done. Let's hope this goes well. Bashy longs, Bashy CHF longs. I'm gonna look to take it from here. I've already got a limit set on this, and I've got limit set on my other account as well, so I'm just hoping it goes well. But I took a L earlier in it, so here we had the sweep, we had the invalid zone. The only problem with this is I should have waited for the break of structure to have happened and taken this zone, is what I should have waited for. So yeah, and then I wanted to take shorts from here, but then price is going back up again. The price is a bit, it's a bit, M1's a bit sketchy today, bro. I'm not easy today on M1. Like even my charts look messy, bro. Like there's a lot going on. Normally they're much cleaner than this. I just need price to come, tap into this order block and shoot off from there. I'd really appreciate a good win today. We got Governor Bailey speaking at 10:15 as well for UK, so I'm kind of mindful of that. I want to get into a trade way before that occurs, so at least, you know, if I have the opportunity to go break even or something, at least I can cover myself and then let it go through the speech, and who knows, he might say something in our benefit. So yeah, let's go on the M1. I needed to pull back into here. Need price to fall back into here. I'm gonna trade Tokyo from tomorrow, but yes, the volume is low. At least there's direction. Decision. Yeah, it's kind of a direction, I suppose. Yeah, but it's not exactly a fantastic price action, if you catch me. GJ longs I wanted, but it didn't really give an entry either. We're coming up to 9:30 though. 9:30 is an important time. Hopefully, you know, after 2-3 minutes, price comes down, taps into this, and then shoots off upwards. I would be grateful for that. I just need price to come tag me, that's all, man. Just come tag me, give me a trade. Even if it's partials, I'm happy with partials, because here partials is 6R, which is 15 pips, so I'm happy with that. Yes, do you want me to show you the news chart? Sometimes it's so slow to pick up, like Google Chrome. There you go. So there's the news chart. So we got man like JP who's gonna talk at 1:30, and then you got Governor Bailey speaking at 10:15. So I want to kind of get in to something before then. Price broke structure to the upper side against us, left another zone to take a buy from. This is very, very annoying. So yeah, that's pretty much what we got today. Now it's broke this high. You could technically take it from here, but I want to keep this zone. We've moved 18 pips in an hour and 40 minutes. Like, we've been in the 18 pip range. Euro is even worse. It's like what, 13 pip range. Ugh. Bashy, I'm looking at Forex Factory chart, but I don't see Governor Bailey speaking. Eh? Look. Let me refresh my chart in case something's happened, because you know what freaking Forex Factory is like, innit? Yeah, Bank of England Governor Bailey at 10:15. Look, I show you. Again, where's the software? There it is. Google Chrome. You see what you can see there, bro? Can you see that? I'm gonna highlight it for you. There. See? Bank of England Governor Bailey speaks at 10:15 a.m. That's today. In like 45 minutes. See? And even on financial juice, Governor Bailey, Treasury Committee. See? Meeting starts at 10:15 today. You see that, yeah? Refresh your chart again, bro, in case something's happened. But I know that there is glitchiness on that sometimes. What the heck happened here? The whole section's turned to a weird color. No sign of it on Forex Factory. But you've seen that I've shown you, right? So why is it doing that? Bro, this is confusing because I need to know, innit? Because if he's not doing his speech, then I can trade up to 10:15. If he is doing his speech, then I can't. So, but Financial Juice is saying it as well. Financial Juice is saying at 10:15 today. And Forex Factory is saying 10:15 today as well. So, I don't know, man. Okay, so I'm writing this zone failing also. Brilliant. But I don't like the fact that it's going up and up and up and up and up. It's gonna take these highs or tap into this zone and sell off. Next it shows up now. Okay, so basically I need to trade before back quarter two. So I need to get into something in the next 15 minutes. Look at GU go. Look at GU go. Okay, now EU's taking the high as well. Bro, Lee, I don't like this price action at all. I really don't. Why is it taking the high? No, it hasn't. It's made equal highs. Bro, if you take this high, you're gonna give me confidence to short. If I'd seen that, I would have stayed out the market. Well, I'm giving myself 10-15 more minutes to get into a trade, because normally I get break even in about 5-6 minutes anyway, or a L. So I'm either gonna take an L or go break even and then just let Governor Bailey do what he gotta do, and then just see if that works in my favor. But I want to be in there at least like half an hour before, because you know, like before speeches, price starts to become quite volatile, doesn't it? And the spreads start to widen, so I'd rather be in a trade prior than after. Right, so now I've made equal highs. Okay. Look at this, man. You Egypt. You Egypt. It missed my zone, and then it broke structure here, and then it tapped into... my god, that would have been one tight. What happened to you? Welcome back, Alan. When you got that speech in it by Bailey, so I think it's starting to pump because of like predictions of what the market's gonna do in it. Because of Bailey in it, Mr. Bailey. So I could have took it from here. That'd have been 1 pip SL. If I took that, it would have been 1.5 pips. Oh my god, just imagine that. This is why I do pip volume. Just imagine that. Nah, I wouldn't do that really. Come on. Yeah, Governor Bailey's speech in it, Alan, at 10:15. So I think price is rallying up, and then he might say something bearish for the pound in it, that he's gonna start talking about rate cuts or something, emergency rate cuts or something in it. Unless if he says we're not gonna do rate cuts this year, that's gonna strengthen the pound a lot. That's gonna really strengthen the pound fundamentally in it. Because USA wants to cut rates. If UK's turn around and says, oh yeah, basically we're not cutting rates, you know what I mean? So it looks like GU swerved me. Thank you, GU. I appreciate you so much. Yeah, thank you, GU. Very much appreciated. And we're back at the highs here also. 929.928. I'm starting to pull back now. Bismillah ar-Rahman ar-Rahim. Build up. Inducement into mitigation. Yeah, possible. I'm either gonna take a L or I'm gonna make some money right now. Either way, something's gonna happen. Let me just quickly check. That's fine. That's also fine. That's not too bad. What trade you now? Well, I'm looking to take GBPCHF longs up to this zone at least. 2.5 pip SL. This zone at least is 15 pip 6R partials in it. And then if I get in this trade before Q2, so in the next 7 minutes, if I get in, I'm gonna hold it through the thingy in it. Hold it through the speech. And then normally I get a break even fast in it, so we'll see if it gives me a quick break even or not. Or it's gonna give me an L. One way or another, there's gonna be something in it. See, break a structure, build up. If I can get this to come down here, it says build up inducement into mitigation of an order block, and then you can fly from there. I'd be genuinely happy. Come on. I'll just chuck it over here and out the way. G's close to taking Asia high. Price is coming to the zone slowly. Okay, Quanteco's about 2.5 pips away from triggering the limit. Not Quanteco, ACG. Here we go, we're gonna get triggered in a minute, Alan. Either I'm gonna get whacked or I'm gonna make something. Okay, so the spreads haven't triggered me yet. It's literally hovering around that zone. Hey, where's gbpchf going, man? Wait in it. Tag me at least, bro. Where you going? I needed to break this structure because if it respects this supply zone now, let's have a better look at this one. Because you got equal lows here, so build up, reduce into mitigation to go there. That's still okay. That's still fine. Be 7 lots on this. You not in anything, Alan? Not at the moment. Yeah. I want to get in this trade soon, man, because then the speech in it is at 10:15. Yeah. But on the dailies, just fill the gap on the Monday's candle. So if it was gonna go down, it should go down because just fill that gap there, innit? Look, see, there. I don't trade after 10:15, Lee. That's my time window, innit? That's what I want to get in before, because my break even normally is in a few minutes. Like the fastest break even I've had is literally 2 minutes. Average is about 5 to 8 minutes, 9 minutes is average break even time. So if I get into a trade in, like, let's say 5 minutes, yeah, 5 minutes after that, 6-7 minutes after that, I'll be break even. Before 10 o'clock I'll be break even. So if I do have some level of profits, I might even get the chance to take partials before the speech actually happens. That's I'd rather get in before. But if I take an entry that's too close to time, it might not even allow me to get break even. If you catch what I mean. Because with M1, like, you can hold through speeches and stuff, but because of the volatility and how tight M1 is, you need to, like, be mindful in it as to what time you take a trade and stuff like that. But we're on 9:49. If I don't get tagged by 9:55, I'm definitely not gonna get in. And you could do time limit in it. Modify. Put till date. There. That's. I hope that's. Oh, that's tomorrow. No. Today. Modify. Right, so I've set a limit on here for 9:55. So after then, it should cancel the limit. Actually, no, I need to keep an eye on MetaTrader in it. I've got too many accounts. So I gotta keep an eye on my phone, and I gotta keep an eye on MetaTrader as well for Alpha Capital because they're pants. Right, okay. See, the M1 has pros and cons in it, Lee. Like with high time frame, 4 hour or daily, you don't even really need to worry about news events or anything like that, or speeches or anything. You can just trade as you wish. But with M1, you need to be mindful because you don't have so much leeway. Your SL so tight, innit? You're so close to triggering me on Alpha Capital Group. Is literally 0.4 pips away because of the spread, and that was around here. So I would have gone break even after this here was broken. Here I would have gone break even on Alpha Capital, but the spreads just missed. And here we were still about a pip away. So Alpha Capital's group's price is 0.5 pips off of IC markets, and their spread is massive, 1.3 pips. That's a huge spread, man. This is supposed to be raw spread account as well. How the hell do you have a raw spread account with 1.3 pips of spread? That's insane. I pick my members to trade ML, but generally I trade higher time frames. Yeah, it's good too, because then when you do trade higher time frames, the benefit you have is that obviously if you have a big enough SL where you don't need to be concerned about getting hit by news. It's just a tiny bit annoying though that literally is a build-up inducement. It just needed to mitigate that zone, and it was 0.8 pips away on here, and on Alpha Capital it was 0.4. Even on, you know what, even on Funded Next, on Funded Next is 0.4 pips away as well, actually. Yeah. Well, let's see if it cancels the limit in time then, because you should cancel the limit in it at 9:55. Shall we stream the Governor's Bailey speech? Because I've got the link for it. At 9:54, so I doubt there's going to be a 1 minute drop 20 minutes before news, so I think that should, I just want to see if it cancels the limit itself. I hope it does. Also, what's the purpose of this top fans anyway? I don't think there's any purpose, is there? Leaderboard, fans to stand out in the community, top 3 get a special badge in the live chat. Send you need to, how do you get on the leaderboard? Send live chat, super chat. Oh, it's just something stupid, isn't it? To make people spend money on YouTube. Okay, so literally in 10 seconds, 20 seconds it should cancel the limit. Okay, let's see. 3, 2, 1. Oh, it cancelled the limit. Oi, that's sick. Oi, that's sick. Yo, that's gangster. Yo, that was cool actually, I can't lie, and cancel the limit here as well. Right, let's close all these accounts down, because now they're all useless. No. And then close that, and then leave this open. There, sweet. I'll just get the link ready then for the speech in it. I think I found it. Odds are it's gonna be on Financial Juice anyway, because they update the links. So the links of where the people are doing the streams and stuff anyway. So hopefully they will include that, and then we can watch it there also. So yeah, that might be perfect. So I don't mind this anyway where I'm right, because obviously that'd have been boom, enter in, break even, continue. But it's just a bit annoying, innit? I look on Financial Juice, couldn't handle the speech right now. I couldn't handle. What do you mean? I was just thinking, if we're gonna sit here and chill anyway, might as well watch the speech in it rather than do nothing, if you catch me. That's what I was thinking. Yeah, perfect. It literally makes sense. I'll think about it, because I might just go for a walk instead. Haven't walked in a couple of days because the weather's been horrendous, man. Look at the weather today. See what the weather's supposed to be today. And it's gonna rain, innit? Damn it. 40% chance of rain from now all the way through till 2 o'clock. What shall I do then? Probably best to not go for a walk and get drenched. Yeah, I might stream it then, why not? I'm gonna be here anyway, so. Liquid sunshine. Welcome to UK. That's funny. It's much needed. Yeah. I mean, I don't mind that it's not like so hot now because it's calmed down a bit, but now it's a bit nippy, innit? I don't know how it can be like 25 but still feel a bit nippy. Actually, yeah, look at that. What's up? Habibi.
Festival season, so great when you've got Foxy Mobile's unlimited data for social media.
Because you can see everyone's festival snaps and feel like you're there.
There you
even though
go.
you're not there.
Yeah, and it
There you go, there you go, there you go, there you go. I was wondering where you were, Akhi. But you're here now. Peace be upon you all. Walaikum assalam wa barakatuh. Bro, this price action is number one khara. Number one khara. So I took a L on GU longs. Then I wanted to do GBPCHF longs. From here, price missed me. Come up here, missed me from here basically, which is so annoying. So yeah, it's just yani khara price action. I don't know what else to say. It's just the khara price action. And then you got Governor Bailey who's gonna speak in a few moments as well, so that doesn't help. Will it? No, it doesn't drag them all. So yeah, OT, price has not been so good. Just sitting and waiting now, innit? I might stream Governor Bailey's speech because the Bank of England's gonna have a speech in a few moments, so I might stream that. I didn't look at the charts yet. I just know I'm down on Euro 50, probably due to poor earnings report. Likely. That's likely. I updated the thumbnail with my picture and stuff anyway, and I've done obviously different thumbnails and stuff. I've made a few a few different thumbnails and stuff for YouTube, so I just need to start making some content. If I don't look, then I don't know how much I'm done. I guess I'll just never look. If you've got no SL and you've got enough capital where you can go down and then go up, you'll be alright. Actually, I think the yen pairs are hot at the moment. JPY was pretty strong yesterday, pretty strong yesterday. Yeah. Well, the yen is the opposite of the dollar, innit? So if the dollar is down, the yen's up. If the dollar's up, the yen's down. Yeah, perfect. It's annihilated that zone, ain't it? Perfect. So yeah, that trade would have been good if it tagged me. Be back in 5. Yeah, ليست مشكلة أخي. Now maybe if price comes up to here at these levels, we might be able to look for a potential reversal from there, but it's outside of my time window now anyway, so I'm not really bothered. Yeah, I cancelled it, innit? Because I didn't get tagged. So if you look here, Alan, the idea was to basically this was where I wanted to where did I want to long it from? I wanted to long it from here. But price missed in it, and I wanted to literally target 15 pips, which is this here, but then price just missed. So yeah, on ACG it was 0.4 pips away because the spread was, it literally wicked into the zone, but the spread was like, the spread just missed it by 0.4 pips in it. Same with the funded next on my phone, and then obviously on IC markets there was a bit more of a gap in it. It was actually 5 to here, so on IC markets is 0.9 away. Mine I go again tomorrow. Yeah, that's why I'm not bothered, innit? That's why I'm not bothered, bro. I only risk 0.25 on my master, and my slaves are like between 0.25. Some are 0.5%, some are 1% risk, but the 1% risks are the one that are around break even, innit? So I don't mind risking more on them. But it would have been good if I got tagged, man. And there was another build up inducement. We broke structure there, so it didn't tap in here. Or wouldn't have tapped here either, because you could have took it from here also. From this zone, but the spreads are like 0.3, 0.4, 0.5 in it, so I don't know if it would have got tagged. Definitely got tagged. Yeah, it's one of them. It is what it is, isn't it? That's why I'm not too bothered. And Governor Bailey's got a speech in a few minutes, so I'm gonna stream that. I'm just waiting for it to. The proceeding will start shortly. Perfect. Thought I might as well stream it whilst we're here, innit? Probably watch about 15-20 minutes and then dip. I'm just waiting for it to start. It should start in a couple of minutes. Talking about going again tomorrow, Alan, I swear we got bare news, haven't we? Like PMIs and stuff like that. Oh, that's Thursday. Wednesday's gonna be okay. Thursday's gonna be mayhem. The whole day we got PMIs. Yeah, UK, USA, Euro, unemployment claims. So yeah, Thursday's gonna be well volatile. And Friday's going to be a bit relaxed actually, so that's not too bad. And then we got NFP. Friday, 1st of August is NFP. Yeah. Basically, I'm gonna try and stream 7 in the morning, yeah? Try and hop into a trade before all the news. And then hopefully all the news does tuck, pushes to TP, innit? Welcome back, Habibi. Yeah, that's fine. Take your time. I just normally trade these 4, bro. Before me to look at it, I look at it for you, but I don't really trade them. Also, Fed meeting next week ahead of NFP. Yeah, it's gonna be a big week, man. Oh wow. I'm going on to the H4. I'm a high time frame trader. Oh wow, this is like GBPCHF. Proper range band. This would be really good on the M1 app. Because look at that, when it goes, in it. Oh, that's not bad, you know. What's the spreads like? .5. Yeah. What's an average order block size? You know what? Oof. Oof. Yeah, I don't know. Yeah, it's got some moves, you know. I can't look at more than 4 pairs. This is the most I can manage on M1. I can't manage more than this. It's too difficult. Let's go back to E. Right, it says it's due to start in a few moments. I just want to hear him say, yeah, we're not going to cut rates and then the pound goes stronger. That's it. Yeah, that's what I mean, innit? They had a really like strong inflationary thingy in it, so it's gonna be interesting to see what he says. But it's good if he says we're not gonna cut rates, because once he confirms, it's gonna strengthen the pound in it. Once they say that, oh, this is gonna happen, that's gonna happen, that's when you know they're gonna be like, yeah, we're set on this thing or whatever. One of you lot do me a favor. You know how you can do the emoji reactions, yeah, into the video? Just do 1 or 2 of them. I want to see if I can see it or not. They do like the heart emoji where you just want to see if anything happens. What's that emoji, bro? So you know when you have it on your phone, yeah, where you click the little thing and then Governor Bailey toward Bashy built the freedom of birth in recognition of his niece and walked to Turkish restaurant. Lee, you're an asshole. What the hell? That's good. That was funny. I like that. That was funny. Yeah, Bashy doing it. Okay, so you know the one where you click the hearts and it gives loads of hearts on the screen. Oh wait. Wait.
If I may, Governor, about what your, any concerns you have generally about financial stability, obviously, around the report, but particularly, what is your concern about the cost of borrowing at the moment? Because obviously that's going up, and how do you think that's affecting financial stability?
Well, I think you're probably to movements in bond yields particularly over the course of this year. So I think the first thing I'd say is that we've seen an increase in term premia in government bond markets, by which what I mean is that yield curves have steepened, so the cost of borrowing at longer term has increased. Hasn't really increased at the sort of short end, because that's pinned down by monetary policy, so that's determined by monetary policy. But we have seen steepening of yield curves going on. Now, I think the important thing to say is that is a global phenomenon. It's not in any sense unique to this country. In fact, the pattern in this country is not in any sense out of line with what
Is it clear? Is it loud and clear?
We've seen steeper increases in some other markets. So what are the causes of that? Well, in the short run, I think it is greater uncertainty, clearly, on two fronts, really. I would say one is obviously uncertainty around exactly what's going on in sort of trade policy at the moment, and the uncertainty that's great. The second thing is uncertainty globally around fiscal policy, and that's again a global phenomenon. What I would say there is that actually, if you put it into a somewhat longer term context, so look over the last decade, for instance, one of the big shifts that we've seen in the landscape has been a shift in many countries, and this country is true of this, towards greater government borrowing. But actually that, on the other side of the sort of the balance sheet, in terms of the private sector, and here I mean both households and corporates, debt levels actually have been the increase in debt levels has been much more subdued. So we've seeing this sort of shift in the balance of borrowing.
Man's hairline went from here all the way to the middle of his head, bro.
and sort of deliberate directions in fiscal policy. And I think that uncertainty around the direction of fiscal policy is having some effect on term premia as well in bond markets. Again, it's a global phenomenon, though.
You sound sort of unconcerned. I mean, is that a fair characterisation, or is it just the governor of the Bank of England always has to be unconcerned?
I mean, it's reflective of conditions. Now, those two conditions are, one is much greater uncertainty around geopolitics and trade policy, and the other one is a general trend and pressure on fiscal policy in many countries, I would say.
Okay. Well, I mean, we could talk about that a lot more, but I wanted to really turn to Professor Krosner and Caroline Wilkins as external members of the committee. We've had a lot of discussion about regulatory change, and the Chancellor made those points again at the Mansion House speech with her Leeds reforms. Do you have any red lines as individuals and members of the committee about where you would want to see on regulatory change?
Inshallah, inshallah.
Well, it's certainly very important to make sure that we maintain resilience in the financial system. That's fundamental. That is the key remit, the prime goal of the Financial Policy Committee. So certainly anything that we would, or at least from my perspective, I can't speak for others, that would challenge the resilience of the financial system would be a red line. But I don't have any particulars that I have
no concrete examples,
but no concrete examples. But that certainly that's our remit. That's what we need to do, and extremely important that we continue to maintain financial stability, because that's fundamental to economic growth. We saw that during the global financial crisis. If you don't have financial stability, it's going to be a major challenge to have economic growth.
Indeed. What about you, Ms. Wilkins?
I share the same support for the financial stability mandate, and at the same time I realize that a lot of the reforms that we did post the GFC have stood us in very good stead. We've seen that given the stresses that the banking system, not only in the UK but elsewhere, has come under over the past few years. At the same time, we also know, with all humility, that it's not perfect, and there are ways that we can look at those regulations and maybe simplify them, maybe alter them in some way, and still achieve a very good financial stability outcome with more efficiency. And so I think part of our work that we're focused on is just exactly how to do that specifically in a way that really does serve the growth agenda.
Could you talk us through how you monitor as a committee that change? So you're saying, you know, we had the changes after the financial crisis. As you say, nothing's ever perfect, is it? But
this woman looks like a proper typical moody cow.
Change and how that has an impact, how the regulatory reform has an impact on stability. What are you looking at when you're in committee or you're preparing for it to make that judgment? And obviously, your experience from Canada is probably quite relevant here.
Well, I think it depends on what aspect of regulation you're looking at, and so I can give you a couple of examples quickly.
Yep.
One example that I think is very recent and relevant is
Astaghfirullah. I'm talking about the fat
that
one.
we had given with respect to the add-on to the interest rate, so that people could afford their debt service ratio wouldn't be too high if interest rates increased, say, by 300 basis points relative to the contractual reference rate. At the same time, we had a loan-to-income, or we have a loan-to-income flow limit of 15%. And the question was, well, after a few years, can we do some analytical research to see where are they binding and are they
Ali's
both
gay.
needed? And because we had the data and the experience, and as you know well, we realized that in fact we didn't need them both. We thought we could achieve the same financial stability outcome with the FCA's own affordability limit, and so we made changes there. Same with another change with the LTI that we've done in the last FSR, in the last committee meeting. On the capital side, there's stress tests. And so, again, those are checks on the levels of capital, the buffers that are there. So there's different mechanisms.
No, pound down, pound up.
Having been at the Bank of Canada and looked at other central banks, the Bank of England is quite good at their modeling and really ambitious in terms of their data collection to take this kind of analytics seriously.
Okay, so you're leaning into the data and that analytics very heavily. Professor Krosner, anything to add?
That's exactly right. I mean, I think one of the things that was very attractive to me about when I was very honored to be asked to be considered to be part of the committee is that the Bank of England takes cost benefit very seriously, and I think that's something where we do dive into the data, we do the analytics, and try to think about what's the best way to achieve the outcome, which of course is as Carolyn had said, never perfect. But we try to reassess, just like we had done with the mortgage affordability issues, put out a rule, gather the data, assess, is there a more effective way to assure that we get the goal that we want at the least cost?
Okay, and obviously we have the Chancellor making her Mansion House speech, leaning into the previous pledges she'd made, now called the Leeds reforms. If I go first to you, Professor Krosner, are there any elements of those reforms that won't worry you, make you nervous? I mean, in terms of financial stability, and if so, how are you pushing back or making judgments about how to implement those?
Sure. So I think there are a lot of different issues that have arisen. And basically, we use the same sort of focus that I was mentioning from before. We sort of look at the costs and benefits. We take the financial
when they say something big, then you're going to know
very, very seriously. And I at least so far, in the way in which they've been proposed in a general sense, I don't see a necessary clash between financial stability and some of those reforms. But always the devil is in the details. Exactly how do you do it? If you reform capital, if you reform liquidity, those can be reasonable reforms, or they can be ones that face a lot of challenges. One of the biggest challenges we have is in the post-crisis period, a lot of activities have moved outside of the traditional banking sector. That's both an intended and unintended consequence of the post-crisis reforms. You wanted some risky things not to be done by banks, but just because the banks aren't doing it doesn't mean that no one's doing it. And so that's one of the reasons why the committee has really focused on the non-bank sector to make sure that you're not just getting a migration of risk to an area that's less transparent.
Okay, very thing. Ms. Wilkins.
Me too.
I would have said something very similar to that, and so to save time, I would just add that aside from the non-bank financial sector, the other area that I think is really important for innovation and growth are new areas like AI, like stablecoins, other forms of digitalization where hard choices need to be made about our risk appetite, where the risk to financial stability actually lie, and how do we get our arms around that and have the right safeguards while at the same time not inordinately getting in the way of what might be a very productive innovation.
Thank you. John Green, MP.
Just quickly, Professor Klosner, you mentioned the non-bank financial sector, and that's something that features prominently in the report.
Yes.
Are you confident that the bank has got the right tools to get information on what's going on in that sector? And are you confident that at the moment it's adequately regulated from a stability point of view?
So one of the things that the Financial Policy Committee has done the so-called the SWES. I had been at the Federal Reserve, and I didn't think there was any institution that could possibly have more acronyms than the Fed. But the Bank of England makes the U.S. Federal Reserve look like very simple on that. So this was to try to look at exactly this sector, and it was really the first work that has been done to try to look systematically at the
He's sat there chilling,
sector.
letting everyone else
and so we're still learning.
Take the questions.
And so I don't think I have a final answer to you yet on what other tools we might need. But it was a really valuable first step that now a lot of other countries are following. I actually give my first speech as an FPC member on exactly this issue, that the US should be doing something.
Did
like
you
this
say NPC? He's a non-playable character.
Thank you very much. And
Did he say
It's a very
NPC?
interesting point you make about access to information.
He's a non-playable character from a game.
Randy made about the system-wide exercise. Now, we were able to do that because we have a very large concentration of financial services industry in this country. And we were able to go to the firms, and indeed the firms were actually pretty keen to sign up to this exercise. And so we did it, if you like, in a sort of hub and spokes arrangement where we were the hub and they were the spokes. And they provided us with their information. Globally, and that was very helpful to us, by the way. I mean, that allowed us to do, a very comprehensive exercise, which is a world-leading exercise. Globally, we are not yet in as good a position on this front, and that's important. And so, if
that's an important statement.
For a moment, just chair of the Global Financial Stability Board, we are doing work at the moment in that forum to seek to improve the access to data globally, because we do not have the same consistent access to data that we were able to get in this country as the Bank of England, and that is a matter of some concern. Yeah.
I'll ask potentially a stupid follow-up question, but following the financial crisis, we introduced EMIR and MiFID, and EMIR and instruments like that target information gathering for monitoring. Don't you? That's one of the key policy purposes for it.
Yes.
Is it that area we need to look at updating global regulations so that you can get more information from different institutions and different types of institutions?
It can be. I mean, there's two parts to it, frankly. The one is access to information, the other is sharing it. So you have situations where there is national access to information, but there are not gateways to share it internationally. Now, this is, I think, a particular issue when you're talking about the non-bank world. So let's take the hedge fund world as the most obvious case point, and it's actually also the biggest case point in this. By their very nature, of course, they are cross-border institutions. They are global institutions by the nature of what they do. So access to global information is very important. So we have a sort of slightly privileged ability to get access in the UK because we've got such a large concentration of the industry here, so we can go to them. But we need better global information on that front to complete the picture, I would say. So it is important.
Thank you very much. Lola McAvoy, MP.
Thank you, Chair. I wanted to pick up on Professor Krosner's expertise and talk a little bit about the markets and equities at the moment. So US and global equities have bounced back from the initial tariff shock. What's your read on why that's happened?
So it's always very difficult to assess the market movements. I'll give a stab at that, but there's, as economists say, there's a wide standard error in giving and trying to explain those market movements. So I think there was a shock that came that people weren't expecting the kind of tariff proposals that the president had come up with, even though President Trump had talked about imposing tariffs. People really didn't know exactly what that would look like, and I think they were quite surprised at the extent of them and it was both the level and the breadth of them. Now, obviously, what happened over time is that the president has proposed pushing back the date for when these would be implemented, for giving more flexibility for negotiation, and so I think that was something that was very helpful for the market to come back. Some other things that have also happened in the U.S. is the president's bill related to the budget and taxation was passed, and that has significant cuts to, or I shouldn't say significant cuts, significant extension of previous cuts to taxes on investment. And that has been very, very helpful on maintaining investment in the U.S. So my colleagues at University of Chicago and others did work on the initial Trump tax plan from the previous administration, and found that the initial expensing of investment was very powerful in giving incentives for investment. And the new bill makes that permanent and reduces the uncertainty around that. So I think a combination of some of the reduction of uncertainty related to taxing of investment, I think greater clarity around the tax proposal, the tariff proposals have helped the markets to feel more confident, and also the U.S. economy has continued to be resilient. The labor market has still been fairly robust. Consumption has been fairly robust, even despite some significant initial drops in consumer confidence. The actual spending numbers have been reasonably solid.
Can I add just add one point, if you don't mind, to this? I think it's very important because there are two things going on here which sort of sit somewhat in tension. One is, as Randy said, is the reaction to obviously all the news on tariffs. And the fact that equity risk premium have gone back to where they were before that news came out is a vulnerability. I think it must be clear that that looks like a very compressed risk position. On the other hand, there's this other story that, say, Randy was referring to, which is essentially, of course, particularly in the US, it's a very strong tech-led growth story. And just to give you, here's a striking fact, if you like. The market capitalization of NVIDIA is now larger than the UK's GDP. It's up 20% this year. That is a pretty striking fact. It's 7% of the overall market capitalization in the US. So you've got these two stories, these two big stories running sort of alongside each other, and in some ways in a bit of tension with each other at the moment.
Thank you. And you mentioned in your speech about obviously the global threats. That's the big concern for stability in the UK. So how do you think the falling back to April or pre-April, pre-tariff equities is going to impact us here?
Well, just to develop it, I think in terms of markets, one of the other big things that's happened is that we've had a breakdown in what I would call established correlations in markets. So that's another area where we can be quite heavily affected. What do I mean by that? So prior to all of this starting, for some time, you'd had a pretty established relationship, and here I'm talking about the correlation between bond yields, equity markets, and the dollar exchange rate, really. What we have seen since April is that
he's making a really good point right now.
Essentially broken down somewhat, and the one that's particularly broken down is the dollar exchange rate. So the dollar has depreciated. So at the same time as we were just discussing this story about equity risk premium going back to where they were, the dollar has continued to depreciate. Now, I think there are two things behind that going on. One is that over time, I think longer-term investors who were typically overweight dollar assets are looking again at that and saying, we probably don't want to be so overweight as we were. And so there is, over time, this will take quite a while because these are longer-term investors, so it takes longer to work its way through the system. I think we sense, and we are told by the markets, there is rebalancing going on, which involves a reduction in exposure to dollar assets over time. And the second one is that they were also typically unhedged on their dollar positions, because actually over time it had been a pretty good trade because of this growth story that I was talking about a few minutes ago. And now we are, the message we get very clearly is that there is hedging of dollar positions going on to essentially hedge against that, what they're now seeing as a decline in the dollar exchange rate. So the most crowded trade in the market at the moment is short dollars. And that's, of course, important because 90% of FX trades have got dollars on one side of them. So that's the thing that, again, in terms of impact on the UK, we have to watch it very carefully because this is a major change in market correlations.
So the recalibration, do you think we're finding ourselves in a new normal?
That was a good answer, man.
You said it's going to take quite a long time, but to get to a position of
You're actually quite informative.
Oh, I think this will go. We'll be.
It's very informative.
For two reasons. One is because, as I said, it takes longer-term investors move more slowly because their positions move more slowly. Secondly, of course, it does depend on how the whole trade and tariff story plays out. We're not through it yet. I think that's. We don't know much for certain, but that's probably one thing we do know for certain.
Thank you, Ms. McAvoy. Harry Baldwin.
Yes, thank you very much. And Governor, I'm interested in the Financial Stability Board's view on the latest ring-fencing review. So the previous government did one under Sir Keith Skeoch, and there were some changes, and now the Chancellor's announced as part of the Leeds reforms there's going to be a further review of ring-fencing. So clearly that's something that the banks have persuaded her and the Economic Secretary is needed. You've come out very strongly in favour of the current ring-fencing regime, and I just wondered if that's the view of the whole committee.
Yeah, so I think, I'll start with a general point because I think it applies very well to this case. And it picked up things that Randy and Caroline said earlier. There isn't a trade-off between financial stability and growth in the economy in a fundamental sense, but does that mean every one of our rules and every one of the details is perfectly formed? No, it certainly doesn't. So, I was very, in a sense, supportive of Keith Skeoch's work. I thought he went into the detail of it, and there were things, as you may remember, Parliament legislated the ring fence down to a very, very great level of detail, actually. That's obviously what you can do. Were all of those details, frankly, once it got put into practice, possibly the best way to do it? No, I think Keith Skeoch pointed to some sensible things. The government wants to have a further review. We will certainly, I haven't discussed it yet, particularly with the government.
What are the red lines of the committee? Maybe
Well, the red line is, look, I do think, as you said, I've said, and I have said, and I'll say again, I do think that the ring fencing regime is an important part of the structure of the banking system. I'll give you one big reason.
I'll watch another 5 minutes and then I think I'll stop at that point. Probably 10 more minutes.
Much easier. And it benefits particularly in terms of UK customers and UK consumers, businesses and households. So I think that is a helpful feature of it. I don't think it hinders banks fundamentally in terms of their business models. But look, again, at the margins, I'm sure there are things that can be improved, and we will work constructively to go through that process.
The view of your committees, you want it to remain in place with some tweaks. It sounds.
I think it has established itself as part of the system, and I don't think it would. To me, it would not be sensible to take it away at this point.
President, do you have a red line in this area?
Once again, no particular red lines. I mean, what we do is we look at the cost benefits of different changes and try to see how we can achieve the resilience goals at the least cost. And so I think that's exactly what the Chancellor is trying to raise in the proposed reforms. How do we maintain stability at the least cost possible?
Wilkins, do you have a view that this should remain in place?
I think it's for the reasons that were mentioned, it works well. I think particularly given that the UK financial system is an international center for financial institutions, to have institutions that are concentrated on the UK economy is, I think, very helpful for growth. It also is helpful for stability. When we think about those trade-offs between stability and growth, I don't think they're as big as people imagine they are. And in particular, the UK relies quite happily, I think, on a lot of foreign direct investment, a lot of investment in this country. Part of the reason is because there's faith and trust in the regulatory system that it's going to do its job. And accidents like those that happened in 2008, 2009 really undermined that trust, and investment can go elsewhere. And so I think that this system in place has, in terms of international peers, has really reinforced confidence in the UK financial system.
Thank you, Chair.
Thank you very much, Harriet. Governor, you and the committee have wide-ranging powers in terms of recommendations, including to the Treasury. Would you be prepared to use those if you think the Treasury is going too far in its deregulatory objectives?
Well, I think we would certainly start by making our views very clear, and we'll make them clear in public, and we'll obviously make them clear to this committee if you obviously would wish us to do that. So we'll start there, I would think,
okay.
And then we'll...
Do you have, I mean, we've talked about red lines a lot today. Do you have any red lines on deregulation? Because there's a lot of, I mean, you know, the Chancellor again lent into it last week at the Mansion House, and she made a lot of quite strong views about where risk should lie, and that we're risk averse in this country. So to deregulate for that, where are your views?
Well, look, I have two very strong red lines of principle. One is, as I just said a few minutes ago, there isn't a trade-off between financial stability and growth. We've had that experience. And the second one comes out of that. Sadly, I can understand when I hear people say, the financial crisis is now way in the past. We've got past that. That's all solved. That's out of the way. Move on. I suppose for those of us who are veterans of sorting the problems of that out, I think we probably all three of us in some ways were in different parts of the world. No. Yes, of course the world moves on, but yeah, that was the experience of losing financial stability, and we had a very serious recession in this country after that. And so I'm afraid I do react to people who say that, because I say, I'm sorry, this is the fundamental point about why financial stability is important. And the final point I make here, of course, is, and it goes back to one of the earlier questions, of course, success in financial stability is when nothing happens.
Yes. You've said this
so
before.
The fact that we've had market volatility this year, and we haven't had a financial stability problem, we're not worrying about banks failing, we're not worrying about market, it is, of course, a success. Now, it's not always easy to sort of point to it and say...
Repossession is very low, yeah.
Look, you know, this is good news, but as we've pointed to, the UK banking system is very resilient, in our view.
I mean, with all these changes, and, you know, we've had it repeatedly from ministers, it could make it riskier. I mean, one of the things we have to challenge the government on that. Will it mean that consumers are more at risk?
You know, the second part of my overall comment is, however, you know, as I said, yeah, are all of our rules perfectly formed? No, they're not. And by the way, there is a Brexit point here as well. I'm always careful to say I don't take sides per se on Brexit, but because quite a lot of our rule book we inherited from the European Union, from being a member of the European Union. Now, that rule, European Union rules, of course, are made for the European Union as a whole. So you get some sort of, you know, you get an averaging treatment. You don't always get you don't get something that always, excuse me, precisely fits your market. So this gives us an opportunity to look at that rule book and say, you know, how do we, you know, in a sense, you know, make it a better fit for the UK? And that's a very sensible thing to do. It doesn't compromise us on financial stability in that sense.
I mean, the Chancellor has been very trenchant. You know, she talks about regulations being the boot on the neck of financial services firms. Do you agree with that?
I don't use those terms. Let me say that.
Well, so what language would you use if you were to respond to that?
It's not a term I use.
So, do you think that there is a problem with over-regulation of financial services firms?
I think, look, it's that there are areas where we clearly, you know, should look at it for reasons I've just given, and we'll look at it. We're very open to that. We've announced a whole range of things we're doing, and that's a good thing. But we can't compromise on basic financial stability. That would be my overall message.
And I mean, she also has talked about and compared. You know, we've got an international panel here. You chair an international body on financial stability,
yeah.
And the Chancellor's also said that the UK. You know, she blames the bureaucracy, has a culture of risk aversion to the point of obsession with stamping out risk in all its forms. It's not an approach seen in any of our competitors. Do you agree with that?
Well, I would say this, that quite a bit, of course, of the core financial services regulator is international. So Basel, of course, is global. As I said, I mean, quite a bit of our rule book across quite a large bank and non-bank world is inherited from the EU, so it's not unique to us in that sense.
And given the role of financial services in our economy and the size of it in the UK, do you think we have to play a different role? We're now between the US and Europe. There are options there, despite the international rules that will apply.
Well, there's two things I'd say about that.
One, potential opportunity, but potentially a risk.
Yeah, I mean, one I will just say, because it's a comment the IMF made some years ago about the UK, and it's right, is that the UK's financial sector is a global public good. In a sense, it's very big. We're a very big financial sector, and that's a good thing. Obviously, I'm not for a moment suggesting it's otherwise, but it does give us a responsibility globally because of that. Does it make us a sort of, in a sense, a sort of player in the middle? Well, it makes us an important player in that debate, and that's why I'm very honoured to be chairing the Financial Stability Board. It gives us a larger role in that, and we take it very seriously. Yeah. But the sort of configurations in those debates can vary sometimes, so yeah, it's not that predictable.
Okay, well, thank you for that for now. Dame Harriet Baldwin.
Yes, thank you very much. I wanted to move on to the subject of the implications of stable coins for financial stability. And but first I wanted to just talk about the bank's own project, the central bank digital currency, the Britcoin. And you spent millions developing this so far, and yet you've said publicly that you remain to be convinced of the benefits, Governor. So I just wondered, are you likely to make a go
I'll have a look 1 second.
decision on this central bank digital currency for the UK? Other central banks seem to be going in that direction. The US is very clearly not. So I just wondered where your views were.
I think the ECB is the central bank that's so far been well, the Chinese have done it. China's done it. ECB are more committed to it than most others, I would say. So
what are we going to do here in the UK? What are we going to do here in the UK?
Well, two things I'll say on that. First of all, on the spending, if you don't mind me saying so, look, we have spent money so far investigating largely the technology. I'm very pleased we've done that because
it's the gilts. So type in UK 10-year gilts or UK gilts.
How do we get the benefits of digital technology in the payment system?
That's what you can look at.
I think there are huge benefits here in terms of smart contracts, reducing fraud, reducing cost, improving late payments to small firms, which I think by smarter payments technology, which I think could be a real benefit. So looking at spending money on the technology will pay off whichever route we go down. So that's not a regret.
When are you going to decide?
Let me come to that.
Must be a point where you make a go, no-go decision.
Well, I think sort of simplify it for a moment. The question for me is, how do we best get digital technology into the payment system? There are broadly three ways you can do it. They're not exclusive.
The UK gilts are 10-year
commercial
gilts.
Bank accounts, payment systems, because most of our money is in commercial banks. It's commercial bank money. We could introduce retail central bank digital currency. Wholesale's a different matter. We're doing that. That's a different matter. And we could see the growth of stable coins, which is non-bank, if you like, money. My view is we need to make sure that we get this benefit through one. You may have seen, well, you're at the Mansion House, I think you saw what I announced last week. We are going to work with the banks in the UK and with the market to develop and, frankly, digital technology in the commercial bank payment systems, in the main payment systems of this country, particularly the faster ones. I think that's a sensible place to do it because that's where most of our money is. My view is, if that's a success, I question why we need to introduce a new form of money.
Yeah,
now.
So you're not going to do it, are you?
Well,
that's what
we're not saying no, but what I'm saying is this: if it is successful, if the work with the commercial banks is successful, I would need a lot of convincing that the use case was made.
Okay, well that's really helpful because now I'm going to turn to Professor Krosner because obviously in the US they've gone this week down this route and practically everyone in the world seems to, in the US, seems to be issuing their own coin at the moment. And what implications does that have for financial stability for us here in the UK?
I'd like to be on the record that I am not planning to issue a coin.
Probably the only one I feel safe buying.
Yes, I'm one of the very few. Yes. No, so I think this is, it's very important that we finally have a clear regime in the U.S. because that was creating an enormous amount of uncertainty. Things were happening offshore, and to just have activity offshore is not not good for financial stability. You want to have a good regime where people will actually use the regime, and it has to be very clear, and also has to allow for commercial viability of the institutions. And so the key provisions of the Genius Act are that the stablecoin issuers will not have access to Federal Reserve master accounts or
I might stream a speech later,
maybe. They will not
maybe.
have deposit insurance, but they will be able to hold high-quality liquid assets, primarily short-term U.S. Treasury securities. So they will get remuneration on their assets. They will have relatively limited interest rate risk and effectively no
This has the potential to disintermediate a lot of the U.S. banking system and potentially have an impact here in the U.K. as well.
So it has the potential in the U.S. What's interesting in the U.S. is some U.S. banks have become interested in potentially issuing stablecoins themselves. But you're exactly right. If there's an alternative to bank deposits that is more attractive for people, that could lead to money flowing out of traditional deposits into that area. I think the banks are well aware of that. I think their voices were heard in the formation of the Genius Act, and I think they're comfortable that they'll be able to manage this. But this is something for, as we consider the stablecoin regime here in the UK, to ensure that it continues to provide stability. It may provide, it can be a good source of innovation, potentially reduce costs, particularly for international transactions. But we don't want it to come at the cost of financial instability.
I'm old enough to remember when money market funds that had a
EU and GU are pushing up quite nicely.
The guaranteed price collapsed during the financial crisis. So stable coins seem to have the potential also to create a sort of big run on the underlying assets.
And so that's extremely important to try to think about the runs on them. And so that's one of the reasons why, at least in the US, the law now is that you have to hold short-term Treasury securities, so you can't be holding Lehman Brothers paper, for example, because it was the reserve fund that was holding Lehman Brothers paper. That's the fund that so-called broke the buck, because they were holding a company that obviously got into a great deal of trouble, and the net asset value fell below, sufficiently below the 1-to-1 that they had to break the buck. So this is the approach that the U.S. has taken to have that. Now, of course, you have to have very careful monitoring and disclosure around that, because you could say, yes, you're supposed to do that, but unless it's actually enforced carefully, you have to be very wary of that. The Genius Act has, I think, a fairly robust reporting and auditing regime that is part of it. But it is true that that if you don't have confidence in the underlying asset that is behind this, and that there are sufficient assets there, it is subject to run risk.
So Governor, stable coins increase the risk of financial instability.
Key issue, Rand is absolutely right, is that stable coins purport to be money. Now, this is where the key feature of money here is that they have assured nominal value. Because if I'm going to use them to pay money to you, you want to know that a pound you get from me is the same as a pound you have. I mean, this is the whole point about the assurance of the value of money. And that's the test they're going to have to meet to satisfy this, and that's the test we're going to have to hold them to, because, as you say, money market funds didn't meet that test.
And do they have the potential to increase financial instability, Governor?
Well, if they don't meet that test, or if they were purported to meet that test and then failed to meet it, then the answer is yes.
And as we saw recently, the gilt market itself doesn't have perfect liquidity either. You're nodding your head vigorously, Ms. Wilkins. So.
Yes, yes. I feel really strongly about this, because if it's a systemically important stable coin, so it's kind of the backbone of payments in the UK or anywhere, it has to be able to hold its value. And it's not just about the backing assets. It's about the capital it holds for, and liquidity it holds for operational issues, for short-term liquidity needs. And it's about the consumer protection, fraud, AML, all that kind of stuff. And so the challenge for the UK that we're working through is, how do we have a regime that is safe, that provides all those protections, so it serves the UK well, but at the same time compatible enough with the U.S. regime and the regime in the EU, and so because you have to have a business model that's viable in some sense but safe. And so that's the work that we're doing. I think the discussion paper that was put out, that we got lots of useful comments, and we're thinking those through. And I think there's going to be a lot of interesting discussions coming up on that.
Just a quick view on the charts.
I think it sounds like I'm
the
really
dollar is
negative
actually
on
coming
stablecoins.
down.
I'm not. I just
And
feel
EUG are going up.
we're gonna have the potential,
GBPCHF is going up.
particularly in
Yen's
cross-border payments or in just retail payments.
don't know what the hell the yen's
they
doing.
have to be properly regulated.
Simple question for you, which all three of you, which is a yes/no answer, please, because you are the Financial Stability Board. We are we put our trust in you keeping things stable. So, do stable coins make the financial markets more stable or less stable? Or do they make, yes or no? I'm going to say, do they make them less stable, Ms. Wilkins? Just a yes or no.
As they're regulated
Just
now.
a yes or no.
Then the answer.
Well, they can do.
They can do. Yes. They can do.
Yes.
Yeah.
That's
There's
the
a long way to
put
go
it.
before they can.
But without regulation, no.
I mean, the key thing is, one of the big reasons we regulate banks and the bank system is the value of money. It's this assurance over the value of money. So a pound in my bank account is assured to be the same as a pound in your bank account. And they're going to have to meet that test. Otherwise, and that's if they do, the answer to your question is yes. If they don't, the answer to your question is no.
Exactly, I would agree. It really depends on the regulatory structure, and I think that's true. That's true of money market funds. It's true of deposit accounts at banks. It really is the appropriate regulatory structure.
Well, I'm sure it's a subject we'll come back to, Chair. Thank you very much.
Lolo McAvoy, MP.
Thank you, Chair. So, Governor, we just heard that obviously the fact that we haven't had a massive recession as a result of the global instability is a success story for the country.
Yeah, he just talks about what's already been said and stuff, and then at the FOMCs when they get new information, that's when they start talking about new things.
Constituencies for ordinary working people. In terms of the changes to mortgages, we've seen that the individual lenders will be able to exceed the existing limit on the loan to income ratios, and I suppose I'm just wondering, is this the biggest tool we've got to make sure that ordinary people can get a foot on the ladder in terms of buying houses, or is it a very small change?
It's important. It's the thing that we can do. Where I would qualify it is by saying that when we ask people what are the impediments, and particularly for first-time buyers, when we ask them what are the impediments, the answer that scores largest in that question is access to the deposit, not cost of servicing the debt. And we don't have the tool to address that question. So I think that's an important caveat to add, that this question of access to the deposit doesn't get addressed by us changing the way in which we configure the LTI scheme. But I do think we set the 15% limit a decade ago as an aggregate limit because it's a macro policy. It was designed to say there's a certain level in the economy as a whole above which, looking in the past, it has contributed, to economic instability. Now, we've actually never seen the full 15% used because it's a macro policy which, when it gets applied at the micro level, firm by firm, they don't all use it. Currently, it's about 9.7%, I think, is relative to 15. So I think this change, we've made a few changes over the years, but I think this one really has the potential to push that number up. But I come back to my caveat. This question of access to the deposit will, of course, still be very important for first-time buyers.
In terms of the 15% aggregate limit, obviously, if people are using 2/3 of it, do we think, is it enough of a change to get this actually felt by constituents in Darlington, or is it I suppose what I'm trying to get at is when we were looking into it, it sounded fantastic that more people are going to have access to mortgages, but then when we looked into the detail, it seemed like such a tiny change that each firm is going to be responsible for their own individual increases, and they only have a risk appetite of 9.7%, not even 14%. So what's your read on how this will actually shift the market?
Well, we've had large lenders come to us and say that if we were to raise the application of this 15% at the individual level, they would do quite a bit more. We've already had 2 applications in the last week because we've changed it immediately. I expect more, by the way. So I do think it'll make a difference. But look, there are quite a lot of lenders whose business models are not to be large in this market. You know, they're not focused on the high LTI end of the market. They're not going to change because, I mean, that's their business model. So I don't expect every firm to come along to us and say, we're going for it. But I do think it'll make a difference. Yeah.
Okay, thank you. And Ms. Wilkins, you mentioned it in your opening remarks about these changes. What do you think are going to be the actual material impact and how quickly? Obviously, the Governor's just said that 2 firms have already applied. How quickly do you think we're going to see changes on the ground for this?
Well, that's going to be up to the PRA and how they implement it. But what we've been told is exactly what you just heard, is that it's effective immediately. There's appetite, and so what the PRA can do is approve those numbers, but then it's up to the financial institutions to extend the mortgages. And I don't know about their timing, but certainly when you look at the data, first-time home buyers are already a big share of the flow of new mortgages, and this will only add to that. So.
Okay, and I suppose the only other thing was just about changing the 15%. Is that on the cards? So moving that to a wider share, would that not have been a quicker way to get mortgages out?
Well, I think, given we've got so much headroom between 9.7 and 15, I think actually utilising that headroom is the sensible thing to do, first of all. I see the 15 was, we went through a decade ago, and we've actually reviewed it a lot of times over the last decade. And that's a macro point about, the consequences of a downturn in the economy. So there was a reason for the 15. What I'd like to see us obviously is get up to, get much further up towards the 15, because that would make a real difference. I mean, literally it would, I'm not suggesting that this will happen, because there will be reasons why not everybody will do it and it won't be used to the full. But if you ask me a question, well, if the overall number went up to 15, how many more first-time buyers would that be a year? It's about 36,000.
Okay.
That's not small.
Thank you very much.
Thank you.
Boy. James Siobhan.
Sorry?
Except, wouldn't it have been a lot more, a lot clearer, a lot more understandable, a lot more encouraging if you did set a higher limit, if you went up to 20%? Talking to the building societies, as we recently have, who are very sensible lenders, who have a social mission to be of assistance to their members, and particularly to first-time buyers, they've told me that they wanted to see a limit of 20% because they wanted to be able to help more first-time buyers. So why not just make it a lot clearer?
Well, they can get to 20%, but they can get to 20% now. I mean, essentially the headroom is there. If they want to go to 20% and they've convinced us that's sensible to do, they can do it.
Just made it a lot more complicated.
No, it's actually very simple. We've actually changed the policy overnight and said, all you need to do, send us an email, ask for what we call a modification by waiver. It's yours. One of them has already been through the process. So what are we, week on? Another one is going through the process. I know several more are going to put their emails in any day. So this is really very simple.
I met with my favourite building society a few weeks ago, the Skipton Building Society, right. And they're my favourite because they come up with models of mortgages that have, that are about where first-time buyers are at, and many of these potential first-time buyers pay huge amounts of rent, yes, and pay their rent on time,
indeed,
and are good risks, but they can't borrow enough in order to get a mortgage. And so Skipton were really looking at them. So the increasing, and as were other building societies, I suppose I shouldn't have a favourite, but they are sensible lenders, keen to help. Yeah.
100% one of her family members or someone is working for this favourite company.
The sector that will go to you and say, please let us do this.
I think the building society sector will be active in this front because I have the same conversations with them that you do, actually. So I'm expecting them to be quite leaders in this. So I would encourage all your favourite building societies to send us emails.
Yeah, because, we have to do something, don't we, to help this group of people, yes, who are great at paying their rent and who have huge rents to pay, but aren't building up, buying their own home and doing what we'd like to see everybody have.
Yeah, I think there's a second point there, which you rightly refer to, which is a slightly different one, which we also think is important, which is how lenders or prospective lenders can take into account and ensure they've got the evidence to say that the person has actually had a good record of paying their rent, which can actually contribute to their credit record. Yeah.
Thank you. Thank you, Dame Siobhan. Lola McAvoy, please.
Thank you, Chair. Actually, my question was just going to ask you that about how can people who are clearly... Do you want to elaborate a little bit more on that? Because I'm interested in the 4.5% element because... Sorry, 4.5 times your earnings, because obviously people are paying some people are paying double that in their rent. So I just wondered if
I think most lenders, of course, will have an internal limit as to that it may well be higher than 4.5, but they will have an internal limit where they don't feel comfortable going above. I mean, that's the case. I think Dame Siobhan's question was actually about, and I think it's an important one, which is we have been discussing with the lenders, is where the person has been in the rental markets but has established a good record of obviously paying their rent on time and in full, how can that get translated into their credit standing? That's an important question as well.
Could I just say, don't the way caps or limits work is that most organisations will try and come in under the cap. So that they will, they know the cap's 15%. You know, if you come in at 12.5 or 12, you're safe, you're not exceeding it. So keeping that cap of 15%, even if it's an overall and it can vary, will that just not liberate some of those organisations?
I think the difference there is that the 15 is a sort of overall cap. We're now, and yes, up till now we've applied the 15 then down to the level of the firm. We're now saying to them, look, you can come to us and go above 15. And if you want to build a margin in, well, okay, you can do that. But you can go higher.
And what's going to be the watermark for that? So if everybody, following this, I'm sure it's, lots of people are watching at home. If every firm tomorrow,
I'm not sure.
if every firm tomorrow
carried away.
Puts in an application, what's the saturation in the market for going above the 15 that you think? What's your
we can obviously see the whole market. We can add the numbers up. We would look at it as to where it is relative to the aggregate 15, but it's got a long way to go before we get to that point.
Thank you very much indeed. John McGrady.
Okay, well, quick follow-up on the housing, if I may. Just at page 41 of your report, it points out that bank staff analysis suggests that unless there's an increase in housing supply, what these sorts of reforms can do is simply involve more money chasing the same number of properties.
Yes.
And that equals house price inflation.
This is actually surprisingly good to listen to, man.
Price crash, as we saw after the Lawson boom, after the global financial crisis. So how important is it, Ms. Wilkins, that the government pursues policies to increase the supply of housing?
I think it's so important. I do think it's important. We have said for quite a long time that in our view, the major constraint in this area was the supply of housing, not mortgages.
And Ms. Wilkins?
I would echo that, and I would say that that's not just true in the UK, that's true in Canada, that's true in Sweden, it's true in Australia. You can't get around the supply issue, and when you have, the price of housing relative to income, that ratio so high, there's no way around it. There's no reduction in regulation that's going to solve that problem. It's going to be about the supply of housing, and it's going to be about sustainable growth in incomes.
The biggest problem here is we're not building enough houses and increasing the supply. It's what I'm taking from both the Governor and Ms. Wilkins. Professor Krosner, you in the same boat?
Yes, I would agree, and it is also an issue in the U.S. of one of the key things is housing supply in particular areas.
Guys, are you still here or not?
Where I'm from, has relatively low housing prices, in part because of the geography. It's very flat in the Midwest, and so it's very easy to continue to build houses. In many other areas, zoning makes it extraordinarily difficult.
Anyone else? Is it just
either particularities in the area? Or the particularities of geography. And so that is a very, very important
He's already found it. I gave it to him earlier on.
That I think countries are struggling with globally.
Thank you very much. Now, if I may, Governor, I'd like to move on to pensions reforms. And we were discussing the
I think we can call it a day here because I'm really not interested in pension reforms or anything like that. The starter part of the discussion was quite good, but I think now it's just getting a little bit boring. sorry, Bashi, but the one for yields is GB10Y. No, that's what I said to them, innit? UK gilts, it was GBP10Y, innit? I just typed in GBP gilts and it come up. Unless you clicked a different one, I don't know. Let's see what they said then. Isn't that what you asked for? Oh, damn. Sorry. Yeah. My bad. Ana Atazir. I made a mistake. Right, so that was interesting, to be honest, to listen to. I'm glad that longs worked out. I'm just not glad that I wasn't tagged into these longs, or I took a L here and then it went long. This might sound dumb, but which bond does the Bank of England primarily focus on, 10 or 20? I don't know. I don't really do fundamentals to that level, but I'm guessing they're 10-year, innit? Same how the Americans do, because a lot of people copy each other, man. I would assume it's going to be the same. It makes sense it'd be the same. Mr. Glenview is all over it with his nerdism. I think I'm done, man.
Harry's going to be doing my makeup using all products from Boots. Made by Mitchell Curve Case Blush. It looks incredible. The number 7 round of applause eyeshadow. Keep the mince pies closed. It's very gentle.
Hey, it's me in Big View. Hello. That is short-term bonds give a better percentage and long-term meaning money supplies and such, and the longer if the long-term rates are good and the short-term rates, then that's a good sign. Yeah. It shows that they're going to the level they want to go or something like that, innit? I don't know. I mean, we had price movement before, didn't we? But we know a lot of times before news occurs or speeches and stuff, price tends to rally before anyway, doesn't it? It's hard to say. But yeah, I mean, are you looking at yourself in the camera? No, so right screen is here, left screen is here. Right screen is where my streaming software is, where I'm looking at the chart. Left screen is where TradingView is, where all the charts are. Yeah, but I think we'll know when this recession is going to occur because data is going to be the fastest one to give information on yields, as yields take time to go in the direction, as data is instant, isn't it? So if you're more on it with your data, you're more likely to catch that, aren't you? You know what I mean? That's my assumption anyway. But let me go back to the charts again. I mean, I'm not bothered I took an L here because at least I was right overall. Thank you, Mr. Glenview. But if there's nothing to say now, I'm gonna stop the stream because I've been here for 4 hours. 4 hours and 7 minutes. So I guess the answer to my original question was the Bank of England looks at all bond yields from short to medium to long term. I mean, I guess so, yeah. You know, to me, I don't pay too much attention to stuff like that because on the M1 it's not so important. You don't really, yeah. No, just 10 year then. I think because 10 years is the middle one, I think that's why they look at it more often because it's more medium term, isn't it? The only time I look at yields and stuff is when it comes to rate cuts. Like, you know how yeah, true, this stuff is for swing. Yeah, it's not for M1, M5, it's more swing position. I like to understand it, but it's not something I really ever use. I'm looking now at bond ETS do diversify into lots of talk about personal debt. Yeah. But Sean, you know, you're the only person I know who can take 65 million trades anyway, so for you to diversify is probably a great thing, innit? Increasing cross. Yeah. Of course. Debt's increasing a lot in the West. It's funny because in the East there is no debt. But somehow we pay taxes and stuff like that to help us get out of debt, but somehow we're in debt. The West says you tax the people and use that money to fix the economy, yet our economy is not good. And then you look at the East and their GDP is like 4%, 5%, and it's like, yo, what the hell? The only time I really pay attention to it is when you've got rate cuts and stuff like that, just to find out what's going on, obviously, with the perspective of the yields. And if the yields are high or whatever it is, I forgot which one it is. If the yields are high, then you can't do rate cut. If the yields are low, then you can do a rate cut. What was that, bonds? I don't remember. I'll have to watch one of Nick's videos again, but the point is, ultimately, it doesn't really matter for me anyway. I just like to know overall. corporate bonds as well. Yeah. Okay, so I'm gonna get rid of that, and then what we've got here is relatively equal highs. Probably till what? 3 o'clock. 4 o'clock. Yeah. I might trade New York. I'm not going to stream it though because I don't like streaming New York session because that's when I tend to be most relaxed and chilled. JP Morgan has a few good ones. EU50 going to stop loss. It's okay. Don't worry about it. Accept the loss. Get used to accepting losses. It's okay. It's fine. There's no problem. Losses occur. I took this loss here, man. This one was I don't even mind actually, yeah, because the point is that the bias was correct for buys. I was just a bit early on there, and then even if I looked for a way to get in, there was, because I enter off of order blocks anyway. I don't enter off of fair value gaps because then, yeah, I don't like it. So yeah, there's a little teeny loss here. So you can go back to 730 if you want to have a look at that. But yeah. I'm about done anyway, unless you guys have got anything you want to talk about. If you don't, then I'm happy to go. Because I've got nothing. Let's open Discord up real quick. Bashy, need you to place a massive order on EU50 just for my price to come back to break even. Yalla, I'll put 10 million on EU50. But listen, can you do me a favor? I need to borrow 10 million. I'll use your money, yeah, I'll use your money. 100 million. La hawla wa la quwwata illa billah. He asked for 100 million, bro. I'm just a Pakistani living in the UK and he's asking me for 100 million. Who you think I am, bro? Who you think I am? $5, yeah, exactly. Bro, if I was rich, I'd be doing 4K quality streams. I'd have a full office, everything. Like, kitted out. But yeah, I'm gonna... EU still has not made it back to all-time highs. Are you on about EU50, yeah? You thought you'd be like Nick, but you're not Nick. Oh dear. So, okay, so I'm seeing that it's quite... So you expected shorts. So you were shorting it or you were longing it? You were shorting it, weren't you? Oh. I mean, it looks like shorts are the way to go, bro. Long at 5,300 on futures. Right. Okay, so you went long at 5,300. I think the price is going to be similar anyway. But we're just seeing high, low, higher, high, high, low, lower, high, lower, low. This took this high. It's coming down to potentially break this low. So it looks like 4H daily. Yeah, I mean, it looks to me like it's coming down, innit? Because if you go on the daily and you look at, let's fib this, innit? Get the fib on this bad boy. And then let's do some reversals. You know it. Let me just get it. It's coming in a lower level. A discount for a long in it. Yeah, I'd probably want to long it from around here. Right guys, I'm gonna probably end the stream here. I'm tired. I'm bored as well. Been holding the trade for a couple of weeks now. 2 weeks! Wow. Man's been holding trade for ages. Yeah. Unless you guys are gonna, if you're gonna talk, then we can talk, innit? But I just don't know what to talk about. I'm hungry as well. Feel a bit hungry. I'll head out as well, enough charts. Yeah, that's what I was thinking. I'll probably end it here then. Unless Sean, you want to say anything. Alan, Lee, if you're here, if you want to say anything. If not, I'm going to close and then go in. I might trade New York though, but I'm definitely not going to live stream it. I'm done too. Good stream. See you, Bash. Yeah, alhamdulillah, it's an alright stream to be fair. I'm okay. Have a good one. All right, lads, take it easy. Thanks for coming. Like the video if you haven't liked it. It just helps the algorithm. But thanks for coming, man. I'll see you lot later. If you like trade New York, be careful and stuff, innit? I'll probably see you lot tomorrow. Right, peace out, guys. Have a good one. Bye. A fly in the soup is better than no meat at all. I agree.